The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 19th day of February. And what we're looking at here, just let me quickly do this again. Remember I will be doing the news update at noon so that when I get to my show, I can get right to the nitty gritties of many other things. But I do want to do this because it's such an important period. In the Dow chart, there is a strong trend line resistance that has been walking towards almost every single couple of days since the low that was made in that very big spike off the low of 26 December. Once you got into early January, that trend line became really forceful. Once it was pierced, and it was that peak D top that was made on the 18th of January, and then it pulled back. Now, what I'm looking at, and this is very important, is that within the I wonder if I can just find this. Let me just see if I've got it here. I think I've got it. Is that correct? Yeah. So let me do this. I'm going to show you what I showed my subscribers to my opening call over the weekend. And I showed the IWM. I just want to show you, I'm going to move around a little bit here in this particular segment. I wanted to show that there was a left side, right side price time match, not to the low that was made of the 26th of December at 125.81 in the IWM, but about 4 days later, a doji candle, and that made a really nice 157.90 doji high on the 8th of November. This is a very long declining move down, and then a very long move to the upside, but it did break both the 154.56, 154.58 high of the 3rd of December. That's the one that the Dow and the S&P and the Qs all made highs there that failed. That is bounces that failed, and there was a peak on the left side that we were looking at, but this goes back to November. So here we are at 150, today's high 150, where is it? 156.88. So it is just a hair within that 157.90 area of November. It's broken the December high, and it is bumping up against resistance. If I look at the automated Chapman wave repellent lines, we don't have any for the IWM. It's above the 200 period exponential moving average, and the MACD strong stochastic is at 96%, very, very strong. So for subscribers, what I was showing is that there's a pattern. Now I can go to it. Let me see if I've got it right here, what I showed subscribers over the weekend. I think, all right, let me just scroll down here. Is this the one? Nope, nope, nope. Oh, I can't even see. Darn. Nope. Huh. I don't want to waste time. I thought I had it already, and I don't have it already. That's that, that's that. There you are. Okay. So what I showed, and it'll be better to see it this way because it'll be kind of fuzzy. You won't be able to read it all that well because it's a tiny print. But what I showed is that there in the MACD, there was a left side arch. It tested that's the green line, the fast moving average. It tested the red line, the slow moving average, and then it made the M formation, and that middle of the M formation allowed a rally to go to that December high of 154.58. And then, even though the MACD was climbing, stochastic went just straight up and straight down, and then you got that tumble. Well, there's a little difference here because the stochastic is really strong. On balance volume is very strong. And I said, perhaps there's going to be a repeat here where we're looking at the right shoulder of an M formation in the daily IWM Russell 2000 ETF. So there's somewhat limited upside now, but we'll have to wait for weakness to appear in the technicals. That's kind of what I'm looking at in most of the technical indicators in the daily chart of the Dow, etc. Now, what am I really looking for? I'm looking for a pullback, and that pullback says because of the strength of the MACD, the moving average convergence divergence, because at 96% in the stochastic, in this case, now let's go back to the Dow to show you there's a difference. Here, oops, where did I type it? Let me type it again. Oh, that's right. INDU. Because the MACD is a little bit, it's still good, but not quite as strong as the IWM daily. And the stochastics at 93% and having had quite a big dip, not the relatively minor dip that the IWM had. This stochastic went under 80%, but is now back at 93%. The longer that it stays up here above 85%, the greater the chances are that we're going to still find waves of support. It doesn't tell you how high the market can go. In this case, the Dow. The Dow went to a new recovery high today after a Morimbozo candle. That my interpretation of it, which is not quite the usual interpretation that's given in the candlestick books, is that this shows you when it's at the upper end of a rally rather than the bottom end. It's starting to show you that there was intense buying and that there was flurries into the very last minute of the trading bar that was Friday, and that you're probably getting really close to some kind of a shorter term overbought situation. That's all it says. Other things are saying to me that this is probably a time with a little bit of a wider stop. You can start looking at downside action coming up quite soon, but that stop has to have a pretty decent percentage risk, because you don't want to go greater than I still call it a rather small percentage risk that you want. Why? Because it's going to take bad news and market acting to bad news to take the market down. In this case, the Dow 440 points on Friday, and plus today's 34 points, so almost 500 points. To break 500 points to get to that little doji candle of Thursday, a lot of things have to happen. My thinking is it's just going to be a slow grind, and then there'll be sudden bad news if it's going to happen at all. All right, enough with that. That's the technical part that I want you to look at. We looked at gold. We haven't looked at silver. Silver is also up very nicely. It hasn't taken out the left side high that was made January the 31st at 16.20. And we're now trading at 15.93, very close, very nice move above the 200 period exponential moving average, now acting as terrific support. And that it was earlier this morning that the dollar was up very nicely. And now it's giving back a good bit of the gain. It went down to the minus 29 ticks. It's now on the 14 period exponential moving average. MACD is still pretty good. Stochastics at 80%, ready to pull back a little bit. But I wouldn't be surprised if even through this, the dollar does hold quite well. These are two separate entities. I've been talking about that for a couple of weeks now. The dollar is one thing, and gold and silver are another. I'm trying to separate. Every 4 to 6 weeks, a few times a year, they trade in the same direction, not the same percentage gains, but in the same direction. They did that for a little bit. Now the dollar is a little bit weaker, and gold is acting quite a bit stronger. I'll be back. We'll look at the TLT because that's very important. What are yields doing? Well, yields are, in fact, pulling back as the bonds. TLT is up 30 cents at 122.38. I'll be back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, everyone, we're back. So the TLT at 122.26, if it starts to get into the high 123s, that's going to probably portend some kind of exit from stocks into bonds if the market starts to pull back. But if it doesn't pull back, then it just means it's a bounce, and that means yields need to just stay in this little bit of a range that they're in. So let's watch that closely. I wanted to also just show you the high-grade copper. I showed subscribers over the weekend. I said high-grade copper was looking very weak, and then suddenly it came on strong for 3 sessions. Today's session also is up 2.63% at 2.87. That is very good. That's a breakout. That's leg B. That's the first real positive. Now, as I'm looking at it, and over the weekend, I'm doing a little bit more work, and I'm looking at it, and I'm saying, you know, if the job market is still strong, and all of a sudden today we get Walmart with really fantastic earnings, Walmart, which we owned in the 92s, it goes to 97s, pulls back, and our stop gets hit at 93, and then it takes off today 103. It happens. So I'm looking at this, and I'm saying, okay, it's always good news when the economy is strengthening. It should help profits. We'll see if that turns out. So as it stands, one by one, we're looking at different sectors that were very weak starting to come on strong. That would say to me that we probably will see some kind of a rotation, and that means I need to keep my eye on the TR. There we go. TRCCI, that's the Thomson Reuters Commodity Index. It's up a little bit today. It's up 1.05 at 402.98. This is the first. It's a nice sign. It's a good sign. I think it's important that we start to see commodities, at least maybe not all necessarily the soft commodities, but I would like to see commodities strengthen, just as I'd like to see crude oil not break sharply to the upside, but just have a reasonable upside momentum between now it's at 56.43. I would like to even see it in the 58s, maybe even touch the 59s. Then maybe it can rest. I don't really want to see it screaming into the 66s, 67s. Not at this point. It's a little too soon. So I'm watching that very closely. A couple of questions I wanted to get to. Somebody sent to me last Friday. Let's see. Hi, Basil. Listening to your show today, that was Friday. I heard the criticism you received from Kevin, who I think you have referenced before. I just wanted you to know it's not me. This is Kevin in Sacramento. I know it's not you. And I'm up for critique. I don't like criticism per se because that's never constructive. Critique is what I wanted. I just had too many on the same day, so it just didn't prove anything. But I think it's important. I like to. Other opinions are really important, especially if it's showing that I was wrong in something, because that's where you learn. I mean, that's really important. So I do appreciate, Kevin. I've been an on and off subscriber to your opening call since I attended a seminar of yours in Tampa in 2007 to 2000 or 2008. I never recently stopped the subscription because I wasn't trading much. I'll be back. Since I live on the West Coast, the markets open at 6:30 a.m. and I'm not a morning person. Makes it a little harder to be an active trader. I was scanning some charts this morning and saw a stalk leg on the O'Reilly Auto, ORLY weekly. You'll probably get a kick out of it. Too bad I didn't notice it 40 points ago. I enjoy your show and the Chapman Wave. Thanks. Kevin in Sacramento. Very big emphasis, Sacramento. Okay, Kevin, let me show you something. Orly, I did this some time ago. Maybe you were listening at the time, and I drew in this and I said, this is the body. And now I think that if this is what I was saying last year, I think it wasn't at the breakout. It was before the breakout. I just drawn it and I said, if there is a break below the low of 314, and at the time it was around about 342, watch out, because that could be very serious. But if there is a close above 363.20, the body arch high, the week of the 16th of November of 2018, that could portend higher prices. Not only that, that would also suggest that you're going to go to a leg E in the weekly chart, in the monthly chart. Now, I haven't looked at this for a little while. I quickly updated it just a short moment ago. It's in a G/C in the daily chart. But hey, look at this. It broke out. I'm not sure I can actually call this a G, because that move was so strong that I have to put an up arrow there, and I have to consider this is a brand new leg C in the weekly chart. A, B, C, very positive. MACD cross positive, stochastics at 79.99, just about 80%, which is a level I like. And O'Reilly right now is in leg E in the monthly chart, and that's really positive. I agree with you 100%. Boy, what a nice buy in that 340 area, even as it broke out. And now it's at 385. So I think it's going higher. I also think that there's tremendous support between 374 and 365. That's moving average, important moving averages. So yes, let's watch that. And if you look at AZO, O'Reilly is in the auto parts business and says AZO. And AZO just broke out. It's in leg F in the daily. And I have to call this a leg B in the weekly. There's no H after a G. So this has to be a leg B. That's a leg C in the monthly. So the auto parts are doing a lot better than the auto companies themselves. GM is up a little bit today, but actually it's doing better than it was. So yes, and Coda says Stalky been putting a forky in the bears. Absolutely, that's for sure. So now let me show you something else. AAP, that is American or Advanced Auto Parts Inc., had a pop today to the upside. I think there must have been earnings. This is the way it looks. So this is an A, a B, a C, and a D. Goes to a leg D, pops on news, must have been earnings or something. Then it must have had a report, and instead of closing at 178.69, it's trading now at 168.37. Sharp repellent downward. And this also broke out in the monthly. We're going to be watching these very closely. But it didn't make an all-time high like AZO and Orly, ORLY. So this is one of the laggards, and you can see why, because it had earnings, and then they were disappointing. So yes, keep that in mind, and good eye. That's exactly what I was looking at the that oval body that we look at for the Chapman Wave stalk leg formation. Next question I had was from Ollie in, let's see, Ollie's overseas, and he is looking at, it's in Norway. He's looking at, let me see what he says. I have been looking at, let me go. Okay, so he wants to look at BDX. Well, he did my recent, he did last year's, and he did this year's all-day workshop. Let me just see what you want to look at here. I think it was box. What box is it called? Something box. Dropbox. I think is it DBX? Yeah, DBX. 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 Typed it incorrectly. Nope. DBX. Why am I not getting DBX? That's interesting. Oh, NDX. I didn't do that. Was that me? Must have been me. BDX. There we go. Okay, BDX. Now, as I recall, we had one of our dinners. I'm almost sure it was Soccer Matt. Some of you remember Soccer Matt. Then he got married and he moved to California. And I'm almost sure that he was working for Dropbox when it IPO'd. I don't think he's there anymore. Leg F in the daily chart, and we'll do a little analysis on this when we get back. Basil Chapman, Tiger Conditions Hour, Dow's up 27.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, so we're looking at Dropbox, and the question was, when would this be a good time to short it? Well, first of all, earnings are coming out on the 21st. You know, to short this one, let me just see the little history that I can look at. A, B, C minus comes back down. I'm not sure that I'd be looking to short this one. You could be 100% correct because it had a single leg 8 to the upside. but there's enough. Yeah, you can tell this is a tough one for me. Just in terms of, you said what would you do, I would have said I love this pattern right here. Let me just do it the way I would look at it. It made a peak F. If ever there was a time to short it, it was right as it started to pull back intraday. But even then, it's almost like we're looking at, this chart pattern is so familiar. I wonder if I can find it right here. Yeah, there it is. This is it's almost the same as the 2-minute chart. Look, it goes to, in this case, G/C, pulls back, and now it's gone sideways. It hasn't broken down. Yes, it could start a brand new move in the 2-minute E-mini down, but the risk reward was really good right at the top as there was the unbalanced volume was turning down. So let me go back to that and see what we can do. So as far as DBX Dropbox is concerned, trading at 248.18, down 16 cents, I don't see it as any, there's just too many support levels. There's the 9-period moving average at 245. There's the 14-period moving average just below that. And then you can go down to the 238 and 200-period exponential moving average, 10 points. Oh, that's nice as a quick short. You know what? I'm just going to say that I would not be looking at this as a short just yet. Actually, let's look at it. Today is the 19th, 20th. I think it comes out after the close on Thursday. If it does, then let's look at it during my show. Because what I'm thinking here is in the 120, there we are. That's what I wanted to do. The 120-minute chart should have a Chapman wave peak A, peak B, peak C, and peak D, and get close to that high that was made. Let's just check this out. It's gone 120-minute chart, peak A, peak B, peak C double top, peak D. It's right at D right now. Oh, okay, we're getting closer. But even then, as a short, the fact that it came back so strongly after that big slide from the 254 level down to the 237s, and now it's working its way. Now, this is not the kind of short that I'd be looking at. So all I'm going to say is that's the analysis that I can do right now. It's going to be very close to a pullback. Now, there's a big difference between a dip and a pullback and a short. A short would, for me, would imply you had a $248 stock. I want at least a 5% chance, which would be $12. And then if it goes further, that would be great. But I don't really want to have $12 down when you are now $12 away from the high that was made. A 254 round number, oh, didn't mention that. 254 round number high, round number recovery high, that is. And we're at 248. So that's 6 points. Yeah, let's wait. You've done the right analysis. I just don't see it as a short in the sense that it's going to give you a really, I can see it in H pattern and coming back to the 245s and then maybe 240 level. If that would be the kind of thing that you wanted to do, I'm saying, okay, let's look at it in a day or two. All right, good. So we've done some of those things. And at the same time, I wanted to do this right here because it's really important. When we're looking at the overall market, let's just quickly do this. Amazon, nothing to see here, folks. 1630, still way off the 1736 most recent high, January, February high, end of January, beginning of February, but way off the 2050 all-time high. Apple, way off the all-time high of 233. Went down to 142. Now it's at 170 off the peak E. Almost the same pattern as the DBX. Look, pulls back, but now it's holding quite steadily at 170. But terrible looking chart so far until it gets to the 182 area. This is really not very good looking. Netflix is NFLX. Let's look at Netflix. Netflix is the one that had the best rally. It hasn't gone back to the high that was made at 423 back in July. It went down to 231. Well, these FANG stocks took a whopper of a move down, but now it's at 362 and it's actually doing very well. I just don't understand the whole thing with Netflix. It's kind of, as Larry would say, it's beyond my pay grade. there seems to be so much competition, and certainly competition for shows. But anyway, they're doing well enough to have rebounded very strongly, but way off the high. And what am I missing? No, Facebook. Facebook is trading at, where did it go? Facebook is, don't type it on the chart, type it into the little rectangle there. Facebook is trading at up 71 cents at 163. The recent high of 172.47, struggling to get back there. The all-important high of 218 back in July 2018 plummets down to 123. Pretty darn good rebound to 172, 50 points, but now it's just kind of stuck. So that's what I wanted to show you, that there's a rotation going on, and the rotation happens to be including the areas that were weakest at some point earlier on in last year. And now you're looking at, let me see where my favorite ASA is, which we don't have. Wow, big spike up 3.63%. ASA gold and precious metals trading at 10.56. Had a low in the 830s, I think it was. This is a really good 20%, sorry, a 2-point gain. That's very good. So, yep, the metals, there's no question the metals are moving. EUR USD, I haven't done. That's a euro-dollar currency pair. Nice rally here. Still doesn't look great, but this is the first time you're getting these, the turnaround in quite a while, making lower lows and lower highs. It's a 1-to-1 move to the downside to the low that was made the other day at 122, I think it was, and now it's trading at 1.123. And now it's trading at 1.324, and that's really nice. This is a new leg A to the upside, gray leg A. And the weekly chart, well, there's nothing to see here. It's going to take a lot to really improve there. And the USD JPY, did I type it on the chart again? Yes, I did. Okay. So what I'm looking at here is that you've got your commensurate rally in gold with the commensurate slide in the dollar. Not a big deal yet. But that 200-period moving average in the yen, resistance at 111, is quite strong. It's at 110.55, not breaking down, holding pretty well in a consolidation fashion. So there are separate things going on, and that's what I've been trying to emphasize. The whole gold area is separate, I think, to the general market. There's new buying coming in for whatever reason, and it's holding quite nicely. Had a question about the SMHs. Yeah, the SMH is trading at 102.65, up 0.10. And up 0.10%, not doing very well. I think that this is the area that's going to tell us the most. That if by Friday, this coming Friday, in the shortened week, if you're seeing the SMHs trading in the 99s, that's going to suggest we're getting closer to some kind of a consolidation after a spectacular move to the upside. Basil Chapman, Tiger Ignitions Hour. I'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. I just knew there was something wrong. Maybe I just got charted out because I did so many charts over the weekend. The Investors Business Daily 50, just tons of charts, notating all sorts of things. It was DBX, Dropbox, not BDX. BDX is Becton Dickinson. So whatever I said about Becton Dickinson, I still stay with. Let's do this. I wanted to do this particularly, and I'm saying this isn't the chart. It had an instant restart. What am I looking at? I'm looking at DBX trading at $25.99, up 45 cents, and I'll explain what I'm looking at. Chapman wave, you look for the lowest low bar, and you merely count each successively higher peak. Peak A, right there. I'll just tell you what it is. So I can't do that on each one. It takes too much. 21.15. Peak B, right there, around about the 8th or so of January. Then you get your peak C. And then this is very interesting. And then you get your D, and you get a perfect Chapman wave instant restart potential. Remember, it's only a potential. You don't know it's going to be. But what's beautiful about this particular technique is it can tell you that there's a chance that you could have a whole new buy mode, not a buy signal, but a buy mode going to yet another D. So you keep a parallel count. So it goes E/F, the next one, E/A, I'm sorry. And then it goes F/B, and it gets a little messy here. So let me just open this up a little bit so you can see it better. And then it goes G/C, but you haven't yet got, you got a couple of doji candles, but technically there is still a very strong MACD, and the stochastic stuck in the 91%, 90% area, really good. And then what do? You get a leg D, and very unusual, you get the leg D that continues for 3 breakout bars to the upside. So we're at a D right now, and that says, now you're ready. So thank you to all of those. I had Jerry in the Back Bay. I had Ollie out there in a foreign freezing cold land. They can't be colder than us. Oslo. We're looking at, okay, so here we are. So the question is, at the 200 period moving average, exactly right on there. We're sitting there just a tad above it, 25, I think it's about 71. This is trading at $26 right now. Big green candle. Is this, what would you do? My impression right now, and now I'm going to go back. Remember, there's a pattern that I call the snail pattern. It's like a little worm that's climbing the branch of a tree, and you just get these little bubbles, you know, each little arch formation of like a worm climbing up. And what I do is I love to just draw in an easy thing like a trend line. I'm going to make this really nice and thick so you can see what I'm doing here. This is the daily chart. Wait. Remember I said that I'm going to start treating these as educational shows. Why? Because I think it's really important. It's what I do. Wait. Okay. And I'm going to make this green because if it breaks out above it, that's very positive. And here I'm going to do the same thing, and I'm going to make this. I can't believe I was doing the wrong one, and I knew the chart because over the weekend, after I got the questionnaire, I said, you know what, I'm going to spend a little time on this because it's the pattern that I'm so familiar with, but will it have the same outcome? So this is what very often happens with a snail pattern, just climbing up the 14-period and 9-period moving averages, just happily moving along, couldn't care less. What happens is you suddenly get a break to the downside. It's not very big. You can have a kind of a measured move, and it's usually, I'd like to pick a doji or a trough, and that says the measured move can go from the 26s where we are right now, can even go a tad higher because the MACD hasn't turned down yet. Stochastic's as steady as a rock at 91%. I wouldn't be looking at the downside of this as a short. I'd be looking at the downside to say, wow, two things. One is when this stochastic at 91% finally gives in and goes under 80%, it's usually a very serious correction. But until that happens, every rally, every decline is kind of treated as a buying opportunity based on this technical aspect. So this is what I'm looking at. If it closes, if DBX, Dropbox Inc., trades underneath 2450, what I would do, and I'm going to do this just for now, I'm going to do this. I'm going to do format, space to the right. I'm going to give it about another, let's call it 16 bars. I can do some drawing. This is what I often look at. There's a move down at some point. It's quite sharp considering where it's come from. And then it has another move. Sometimes that move actually makes a new recovery high. And this gets stretched out a little bit. And then there's a deeper move down, takes out the low that was made, another rally, and at that point, it sort of stalls, and that's where you want to be looking at it. That also means that on this particular move now, if you give it enough room, you could see a nice percentage move down if you wanted to short it. My thinking always is you want to find a particular place. In this case, I'd go for the oval pattern of the instant restart, somewhere inside the 23.5 area to look to buy it. Well, 2.5 points to the downside is 10%. If you're looking for that, okay. But I don't see this as a short, even with the weekly now at 79% in the stochastic and MACD strong. It's just showing me there's just too much strength. So what I'd be looking at is a very choppy pattern. It just kind of opens out. It stops this very narrow, small candle move to the upside within this trading band, hitting the top, hitting the bottom, hitting the top, higher highs, higher lows, higher highs, and just keeps doing that. And then all of a sudden it breaks, changes the pattern. Once that pattern's changed, expect a really volatile move. And then I would say, depending on the earnings, maybe it's the earnings that just it collapses from the earnings, but I would say just based on the pattern, if it wasn't just the earnings, I'd anticipate this like a big W formation, maybe one nominal new high, maybe not, but I would look for the real decline to start somewhere around the last day of February, last 2 days of February, that's the next week, I guess, into maybe even early March, but into early March, that's where I would anticipate that Dropbox starts to have a deeper series of highs and lows, starting to make lower highs and lower lows. And then I would still say this looks to me like it might be a buy lower down, but that's the pattern I'd be looking at. Whew, thank goodness. Thank you for the correction. I don't know. I looked at the chart and said, that wasn't the one. That was the one with the worm and the instant restart. All right. A question I had here is, where was that? Goldman's? Yeah, Goldman Sachs. Yep, let's look at Goldman Sachs. Goldman is just in a trading range. It made that peak D. Let's look at the XLF. We'll look at the XLF, which is a little better chart than the than Goldman, and it is in a. Is this a leg B, F/G, G/B? I'm calling this a G/B. I don't have technicals, anything yet to say that it's about to tank, but it does say that it could continue in this choppy range between 26, call it 2650s and the 2550s for a little bit longer. That's the XLF, the financial S&P. Oh, one segment to go. Got a bunch of questions to answer. Basil Chapman, Tiger Technicians Hour. Dow just took a dive. Huge dive, about 10 points. It's down. It's up 23. S&P's up 5. We'll be right back. I did put the down arrow in the E on the 5-minute chart.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, don't forget, Steve comes up, David White comes up, then Tom O'Brien. We're looking at the XAL, which is the airline airline index, trading up 1.08 to 105.96. And this is a good candle. Now look at the MACD turned down, the stochastics down at 77%, yet the price is holding very nicely because the technicals, the moving averages are holding very well. So this is, normally I would call this an E, F, and a G, but you have to think of it as 1, 2, 3. So that's not really a Chapman wave instant restart. So this is almost like a brand new potential buy signal. So we call this E/A. F/B, and G/C, I think it's going to go to a D. And as long as the transportation index is doing nicely, that's giving you some comfort because you need to have that. Transportation average is up 0.61%, up 115 at 191.48. This is a leg F. We're going to see what happens here. We've kind of got a little bit in front of this, trying to look at the short side of at least two of the indices. We'll see what happens because there are signs that within each sector, some of the stocks are starting to fail, and some are actually still holding really well. So we'll see. You need price performance. And as far as I'm concerned, until the Dow, what did I say, 25,850, I think it's at 25,918 right now. Yeah, until the Dow actually takes out 25,580. So 580 means it's 360 points lower. And so far it's holding very well. This is just a potential topping area. Now, there are a couple of things I'll talk about tomorrow. One is that this is in my coda phase. What we're seeing now, up, 18% or something in the S&P already this year in such a short period of time. Is this going to be the year that sees this really strong acceleration, just a brutal acceleration up without any real pauses? Gee, I don't know. I thought we'd have a pause, and we haven't had it yet. So that's what I'll talk about tomorrow. Meantime, back at the ranch, Dow's up 39. As we go to the final break, have a wonderful day. Check out my opening call. We still got some really good trades on. And be back tomorrow. And stay tuned for Steve, Dave, and Tom.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.